Bitcoin Academy. And the Bitcoin Academy is Students for Liberty's project to bring interesting speakers like Stephan, that I will tell you all about more in a second, to talk about Bitcoin. Because Bitcoin is, I believe, the single best shot at achieving liberty in our lifetime. And so it is a huge opportunity for libertarians and for an organization like Students for Liberty. However, it is a fairly new technology. It's only been around for 12, 13 years. It's not very well understood. You can read every day in the news how bad Bitcoin is, and it will crash and it will die, because that's basically what the media is reporting to. But we want to dive a little bit more deep into it, and we want to also hear from you. So first, I will introduce our esteemed guest here. Then he will present a little bit of interesting insights about Bitcoin and also how you can be private with using Bitcoin. So very crucial topics. And then we will have a little bit of a back and forth, and then include all of your questions as well. So please keep asking questions in the chat. We will capture those and then address them all at the end. But for now, give me 1 second. So that's what the program is for today. But first, let me please introduce you to none other than Stephan Livera. Stephan Livera is an international man of mystery, but more importantly, he is the founder of the Stephan Livera podcast. It's one of the biggest podcasts just focusing on Bitcoin. He's not talking about any other so-called cryptocurrencies, only just focusing on Bitcoin. He has a 4.9 stay rating, of course, over 600 plus ratings, 2 million downloads. And he is also now working with Swan Bitcoin, which is a service where you can acquire Bitcoin in the United States, but also all around the world. And I have the great fortune to interviewing him once before, and we had like a lot of people there. There was a lot of interest in stage in Nashville once, but also on his podcast too. And overall, a great guy that has a lot of wisdom to share. Stephan, how are you doing today? Welcome.
I'm doing well, thank you, Wolf, and the team, Students for Liberty, for inviting me again.
Wonderful. All right, so then let's get started. You have a lot of wisdom about Bitcoin. You are in the ecosystem for like how long? When did you get started?
Early 2013. So
early
what is
2013.
That? 9 years now. Yeah.
Bitcoin got started in 2009, and basically nobody knew about it back then. So you were a very early adopter, and since then you have basically spent your life working on Bitcoin, which is very remarkable. So we're looking forward to your remarks.
Fantastic. Well, let me just share my screen. Hopefully everybody can see that. And okay, so so as Wolf mentioned, a lot of my time is on Stephan Livera podcast, which is a Bitcoin podcast, Bitcoin and Austrian economics, and also I work at Swan. So I think a couple things to think about with Bitcoin, and I'm going to keep these remarks relatively short because we'll have more of a back and forth and questions time. But just to give a few high-level thoughts, I think with Bitcoin, it's important to have a long-term thesis, because when people start, they sort of think of it more like, oh, I'm just dipping my toes into this thing. And then over time, you might start to think, oh, okay, I should allocate something as a percentage of my portfolio, let's say. That's how people might be thinking. And then longer term, as you go further and further into it, you start seeing it as your savings. This is your net worth. And so that's a typical progression for people. And one thing I would suggest for people is having a long-term thesis. What is your long-term view of Bitcoin? Because if you don't have a long-term thesis, you will sell too early. You'll be one of those people who might have bought at $10 per Bitcoin, but then sold at $100. So without that thesis, you won't have that long-term vision about what this thing really is. So the general framework I'm approaching this from, so again, from an Austrian point of view, like Menger spoke about in The Origins of Money, spoke about this idea of the most saleable good. Money is the most marketable good. And so, and I believe Wolf has already touched on some of these concepts in his earlier talk and presentation. So I won't go too much into it. But if you had to think of it as what is Bitcoin getting its value from, it's because it's doing better on some of these categories. So in this way, I think of it as being, it's more marketable, it's more saleable. And so that's my long-term thesis about this. And so where are we going with all of this? So in terms of where we are today, we're seeing country level adoption. We're seeing El Salvador have a Bitcoin legal tender law and inviting Bitcoin investors and employees and people to come and work and live in the country. We're seeing politicians around the world, such as the New York City mayor and the Miami mayors, come out saying they will take payment in Bitcoin. And we have world famous investors buying Bitcoin, such as Paul Tudor Jones, Bill Miller. We have people in developing countries all around the world using it to take payment in Bitcoin. And interestingly, I will also note this is like a nice little anecdote that you see as well, because if you rewind the clock 2 years ago, around then, Paul Tudor Jones was making his announcement that he had put in about 1% of his net worth, or I believe it might be his personal account we're talking about here. And then if you go back 1 year ago, he was saying 5%. And just recently, Bill Miller came out publicly, even after this recent drop in the price of Bitcoin from around $60,000 to around in the 30,000s, let's say. And as we speak today, it's around 37, 38,000 per Bitcoin. Bill Miller came out saying half of his personal account is in Bitcoin. And that was even at those lower prices. So it's not that that drop had deterred him. And so it's also important to think that there are hundreds of millions of people today who have some exposure to Bitcoin. Now, they are at various levels. As I mentioned, some people start and they're just dipping their toes. They haven't really gone that full length yet. But it just shows that's where we are today. And where are we going with this? I believe eventually, it could be decades before this time happens, but it will be global adoption. It'll be billions of people using Bitcoin. But the opportunity is now. So now people might be tempted to trade, to try to buy low, sell high with Bitcoin. Should you trade? No. Although it's tempting, I think 99% of people will fail and end up losing money attempting this. The reason being, it's very seductive to think that we can time our entry and exit points, but the reality is most people are not professional traders. It takes extreme amounts of effort to take the emotions out of this and either have some kind of professional business around trading. Like if you are an arbitrage trader who has a model, you're using some kind of advanced techniques, not the kinds of things that people are shilling courses online because they saw some, TA analysis. But that said, I think for many people, they have to learn the hard ways. But I'm trying to put this message out there so people don't make this mistake because it's very common. Now, I'm a believer in regular stacking and hodling. Now, what kind of performance could you get from this? Well, here on the front page of swan.com, I've just put a screenshot. I took that earlier today. So as an example, over the last 5 years, if you put $100 per week into Bitcoin, how much would you have put in? 26,000. And how much would you have now in fiat terms? 178,000. So it's incredible the amount of purchasing power growth you can see if you are just regularly stacking. So that's not to say you can't lump sum in. Mathematically speaking, lump sum is often better, or it is generally speaking, it is better, but you need to have the conviction to hold. That's the important thing to think about if you're going to lump sum in at the start. And so typically how people do this is they might lump sum at the start for the amount that they're comfortable to hold and then regularly accumulate. Now that could be buying, that could be earning, that could be mining. There's different ways to go about that. Now, historically, what kind of returns would you be looking at? So this is a stat from the page casebitcoin.com. And if you look so it's a bit small, but I'll read that number off. It's 141%. That is the compound annual growth rate, meaning every year Bitcoin went up 141%. Now, to be fair, I don't believe it will sustain that pace. I don't think it's going to do 141% forever. I think over the medium term, we're looking more like 60 to 70%. Now, where do I get that number? That is from my friend Hass McCook. Now, I've interviewed Hass on my podcast. I've got the link here, and I'll share the slide deck for anyone who wants it. And maybe Wolf and the team can make that available for people. And so basically, he's talking about some statistics there. Like he went and crunched the numbers on what kind of CAGR you would have gotten. And he's showing that, if you had been doing it over, say, 5 years, you were getting 66%. And so I think that's probably a more realistic, something in that 60 to 70% range, at least for the medium term. And it may taper down over time, as we would expect. I don't believe it's just going to stay at that pace forever. But that's back of the envelope numbers where I believe this is going. Now, I wanted to touch on a few practical components as well. Of course, you guys can ask me questions. But in terms of what are some tools and things you can use? So common wallets or good wallets that you might want to look at. So for example, Samurai Wallet for Android is a good one if you're interested in privacy. Blue Wallet is available for iPhone or Android. And Blue Wallet is a very versatile one because you can do lots of things with it. You can do Bitcoin and you can do Lightning and you can do other types of storage and receiving and sending with Blue Wallet. And then for those of you who are looking for more of a Lightning focus, meaning if you want to use more day-to-day spending, that's where wallets like Phoenix, Moon, or Breeze, which I've got listed there, those are some easy ones to get started if you're looking for the day-to-day transactional aspect of it. And those obviously are more focused on Lightning. So that would be if you're really looking to spend and receive with Lightning. And then over time, as you upgrade and as the value of your sats goes up, it's time to start thinking about a hardware wallet. Now, my personal favorite is the Cold Card by CoinKite. Now, CoinKite are a sponsor of my podcast, so just disclosure there, but I was promoting them even before they sponsored my show. I truly believe they are the best in the market currently. Another well-known device is the Ledger, so that's another one that you can use. And so think of this like a way of storing your coins, but you're keeping the keys offline, meaning it's not connected to the computer, so it's harder for somebody to hack or steal those coins. It's not impossible, it's just a lot harder. Now, some common desktop wallets that you might want to look at, I think the top two in the game right now are Sparrow Wallet, and another one is called Spectre Desktop. So I think those are pretty much neck and neck in terms of being able to provide you tools and abilities for you to use Bitcoin either more privately or with more power user focus. But at the same time, I think they also can be taught for a person who's relatively new. So Sparrow Wallet and Spectre Desktop are some easy recommendations for you out there. Now, just some general tips. Make sure you keep those 12 or 24 seed words backed up and safe. So when you start a wallet, generally you'll have to write down those seed words. Those are like a secret key. And think of it like your Bitcoin wallet, which is in your phone or your PC, will know how to derive the relevant addresses and keys associated. So think of it like this is one master secret. You protect this because everything else derives from that. I don't want to go too into the technical details. Otherwise it'll be a 2-hour presentation. So basically, never tell anyone your seed words, even Bitcoin company tech support, because this is a known scam vector. Sometimes people masquerade as tech support and say, hey, give me your seed words, I'll help you with it. But actually, they're going to steal your coins. When you make a payment in Bitcoin or Lightning, this will normally be done with a QR code or maybe a string of letters, BC1, ... etc. Or Lightning, it'll be LN, BC1, blah, 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 etc. And so that's normally how you do it. You'll be scan it with your phone or pay it with your desktop wallet like your Spectre or your Sparrow. And then for those of you, as your value rises further, then you need to start thinking about multi-signature. Now, for those of you who want to have a guided solution, the likes of companies like Casa or Unchained Capital. Now, Unchained Capital is also a sponsor of my show, so disclosure there, but they are there to help you with creating a multi-signature setup that can improve your security by taking away those single points of failure, and you can have multiple keys in different locations, making it harder for any one person to steal your coins or to compromise you. Now, if you are interested in the privacy aspect, I would recommend running Bitcoin with your own node. Now, we'll get into a little bit more about that, or we won't go into all the details of it because that's later down your journey, but there are some of these products and software or node implementations. So Umbrel, MyNode, Raspberry Blitz, Ronin Dojo, Nodl, Start9 Labs have a product called Embassy, or you can actually run your own node box on your own PC. Another example.
Can you explain what a node is for
yes,
people
so
who
a
don't
Bitcoin
know what it
node.
is?
So think of a Bitcoin node. It's like a fake Bitcoin detector. You run it, and it can tell you the correct balance for your Bitcoin wallet. So instead of your Bitcoin wallet being given to you by some other company who's running it for you, the node, instead when you run a Bitcoin node, you're actually running it like your own way of figuring out the truth of Bitcoin. So basically, a Bitcoin node checks all the rules of Bitcoin, and generally they download the blockchain history and they verify that blockchain history to make sure that you are transacting on the correct chain and that you really do hold those coins. And so this is also something that can give you more privacy. Instead of doxing your coins to somebody else, you can operate using your own Bitcoin node. So these are things. Now, if you're new, I wouldn't say like straight away you have to get into this, but I would say it's part of your journey that you would learn how to do this. And this will help you when you want to interface and interact with the Bitcoin world. So those are a few examples. And of course, if you guys have questions, I'm happy to help you with those in the question time. So a few recommended episodes of my podcast. So what I would recommend is if you have your smartphone with you, just pull out your podcast application, search Stephan Livera podcast, and here are some of the episodes which you can check, which are good to give you some overview or some ideas to think about when you are securing your coins. Now, just to, as I was asked to talk a little bit about privacy as well. So for those of you who are more interested in privacy conscious, you want to acquire coins without KYC. So what does KYC mean? It means know your customer. So typically, this is a government regulation, and obviously as we're libertarians, we are generally in favor of market regulation as opposed to the government's regulating things. But nevertheless, companies that are operating in the white market world generally have to do this AML KYC compliance, meaning you'll have to show your government ID or passport, etc., and they will have a record of how many coins or how many Satoshis or sats you have purchased, and that could be seized or requested by the government at a later date or even today. And so that's something you do have to consider. If you're interested in privacy, you might want to consider acquiring those coins without going through a KYC service. So some examples there are BISQ, BISQ, and another one, HODL HODL. Now, again, disclosure, HODL HODL are a sponsor of my show as well. But each of these services will have ways that you can basically purchase directly, peer-to-peer. Or you might be able to go to a Bitcoin meetup, as an example, and purchase Bitcoin from someone in person. Again, using your smartphone wallet as an example. Now, those of you more interested in privacy will want to connect your wallet to your own Bitcoin node. So as an example, you can have Samurai Wallet and connect that to your own Bitcoin node, such as Ronin Dojo. That's an example. Or another example is if you had Blue Wallet and in the back end, you connect that to your Umbral. So those are just a couple examples. Or another way is to connect your Sparrow Wallet on your desktop or your Spectre desktop to your node box or to your node device. Or you can actually run that node on your own PC. So there's lots of different options. And what I'm trying to give you here is just a broad awareness of some of the key concepts. I understand that for some of you, this will be a bit too much and you might not be able to retain it all. And that's where I'm hoping if you are stuck, ask a question and we'll happily answer that. But generally speaking, if you use these privacy-focused wallets, they can basically use techniques that will help obfuscate the trace of your behavior on Bitcoin's blockchain. And so they can help you if you use certain privacy techniques. And we might get into that a little bit more on the next slide. And I'll also just touch on the use of Lightning wallets. So for those who aren't familiar, Lightning Network is like a way to spend your Bitcoin faster and cheaper than with standard Bitcoin on-chain transactions. But there are certain trade-offs with this. Now, Lightning will give you a little bit more privacy than just naively spending on-chain. That's just spending Bitcoin without really thinking about the privacy elements of it. But if you really care about privacy, you want to look at using the on-chain CoinJoin and privacy wallets that will give you the best possible privacy. And some other tips: don't publicly post your Bitcoin addresses and don't reuse addresses. So what do I mean by that? Well, your Bitcoin wallet can generate lots of Bitcoin addresses, and each of those are yours. And so each time you're receiving, the best way is to actually generate a new address and give that directly to that other person to pay you. It's not to post that publicly online, because what that's doing, if you think about it, if I, Stephan Livera, publicly post up this address, then the whole world will know that any coins that went there, well, that maybe they belong to me. And so that then they could trace where those coins are going in the future. And so those are just some tips around privacy. Now, a more private way to earn coins, or to acquire coins, is to earn them. So if you can earn coins by selling your products and services for Bitcoin, then that's great also. Now, if you want to be private with Bitcoin, it does necessitate additional steps. So for example, you might receive coins into your Samurai Wallet, SW, or Sparrow. You might run that through a CoinJoin. And then on the other side, after you've finished the CoinJoin, you can spend using privacy-preserving techniques, for example, a Stonewall. That looks like a CoinJoin, but actually it's not a CoinJoin. So those are just a few examples. I'm just trying to give a high-level awareness and a few high-level ideas. And so then from there, people can ask further questions. And of course, some resources as well. So these are some interviews I've done with privacy-focused individuals and talking about various privacy techniques available in the Bitcoin world today. So that's just kind of the high level with a few ideas, and we'll open it up now. Well, I'll let Wolf ask me a few questions, and then maybe we'll open up for the audience after that.
Well, thank you so much, Stephan. That's great. And that's really a fantastic overview. And it's good to know that these tools are available. But even if you are very new to Bitcoin and you only heard it, like we dug into this week, it just shows you there's a lot of depth to it and that you can learn in order to protect yourself. Because if Stephan and I are correct and Bitcoin becomes a sort of new money in the future, then you want to make sure that's protected. And as we know from history, government likes to screw with people's money, right? If you do something against the government right now, if you live in the wrong country, they will take away your bank account. In the past, they've taken away people's gold. They've done it in India, they've done it in the United States. And so Stephan just gives you like a few tools here that you can potentially look into in order to protect yourself. But that raises like the first question, Stephan, which is some of these privacy things are fairly complicated, and like getting onboarded with Bitcoin is already complicated. How important is it to understand all of these privacy implications before you get started with Bitcoin? What would be your advice?
So if you are a privacy focused individual, I'd say listen to those 3 episodes I spelled out, and then you would want to purchase your coins without using KYC. So that's where you might use a service like Bisq or Hodl Hodl, or you might try to go to a Bitcoin meetup and ask if you can purchase in person. So those are a few tips I'd leave there, but it is a journey. And so many times people make mistakes along the way. And so that's the reality for many people, because most of us had to make mistakes along the way. I've made many mistakes along my journey also. So there are various steps that you might have to take to actually properly be fully private. And it's difficult for a newcomer to fully do that. But if you were, I would say you could try using something like Bisq as an example. So bisq.network, I believe the website is. That's an example where the user can basically spin up a client that can access an order book, and then there are peer-to-peer orders on that peer-to-peer. It's like a decentralized exchange. And so basically people can select an order and purchase Bitcoin that way while they are going down that journey of learning and reading about privacy or listening to episodes about Bitcoin privacy. Now, there are trade-offs with this. So for example, you might be paying a premium. You might be paying for CoinJoin fees and things like this of this nature, but you have to make that decision, and you have to make that decision. Everyone has to make that decision for themselves about that, because the flip side of it is, if you're looking to purchase larger amounts of coin, that's harder to do non-KYC. So generally, that's where you might need to use a KYC service, where you can access larger amounts of coins or different other features, or it might be a little bit more slick or easy to do. And so I think there's different aspects of Bitcoin that can appeal to people, because some people might be believing, okay, I believe my thesis is that governments of the world will see that there's this competitive jurisdictions aspect and that they can't outright outlaw this thing. And because I want to acquire as much, for me, it's more important that I have a bigger stack. It's more important that I buy through a KYC service or exchange or broker than it is to go entirely and only strictly through non-KYC. And I'll also note that for some people, they think of it like, look, there's 2 worlds. I can sort of have a little bit of both. And so there's different approaches out there. I just try to provide the tools and the knowledge so people can make their own choice and make their own, as much as possible, their own educated decision about this. And of course, for some people, they might be more bearish than that. They might think, no, I think the government is going to ban this thing. It's going to go after it really hard. Then in that case, you might be looking more for non-KYC only, right? But whereas other people might be thinking, no, you know what? I don't agree with that risk. I don't agree that the risk is that high. I believe there are other mitigations around that. But I'm just trying to give the information for people.
Wonderful. And I think people realize that because you're just sharing insights. And I also said that the same thing, like do your own research, because we don't want anyone to do anything, right? They should just like make up their own mind. And these are just like some opportunities. But folks have to ask themselves, like, what's the alternative? Holding fiat money that is like really melting away in your hand right now? And how do you protect yourself in this regard? And those are very good questions to ask, but you don't have to feel overwhelmed, even if you do right now. Just get started. But now this raises an interesting philosophical question, Stephan. You are working full-time in Bitcoin, and for the long part, probably you financed yourself, but now like you're getting paid for it, right? And like everyone who's talking about Bitcoin is most likely someone who has an interest in Bitcoin. But we also say Bitcoin is actually like a trustless technology. How do we square this about the trust? Like, why should anyone listen to us? What would be your answer?
That's a good question. So I think the way I come to that is there is some level of reputation in the Bitcoin world that there are certain voices or people who have a certain level of trustworthiness. But that said, of course, in Bitcoin land, it's one of those things where you have to do your own research and do your own work and do your own verification wherever you can. And so that might mean for some people being actually looking at the code of the software that they're running, or asking friends who are knowledgeable to be able to read code of various software projects that they're using within the Bitcoin world. And of course, Bitcoin Core itself is, there are a lot of people working on Bitcoin Core, and there are, of course, there is, of course, a need for review there also. And so at every level, there are people of different levels of competence, and some of them are checking each other in a way, because people might call each other out because, again, there's competition. Just, as libertarians, again, we believe in this idea of market competition, and that providing a good result for the consumer, the user. And so in the Bitcoin world, there's many different Bitcoin projects. There's exchanges, there are wallets, there are different hardware wallets, there are all kinds of different services and products out there. And so it's up to each consumer to basically survey that market and see what they think is the best fit for themselves. Although there's never really like a perfect answer, because there's always some kind of trade-off or some kind of thing where this is better than that in some way or shape or form.
Wonderfully put. And we have to keep in mind that Bitcoin is still a pretty young market. Now it's fairly easy. You can start Googling, you can consume your podcast, you go to YouTube, you join the Bitcoin Academy and SFL, and you get this information, which is great. But like just a few years ago, there was no such information, and people have lost their coins because they didn't know like how to keep them safe. And that goes back to my earlier point. Like, it would probably be good to learn about this. It's like much easier to be safe these days compared to a few years ago. But like, if you don't do anything, then you will also losing value, which is the reality, because you're trusting a money that is right now run by government. So do you want to have like DMV level intelligence regulate your money? Whether not. And so we have to look for alternatives. And that's what we are doing. And this is only like one option.
But I think one point I just want to add there, Wolf, because as you were saying, right, I think sometimes people look at things and compare them to perfection, right? And I think this is like this nirvana fallacy, right? So and we see this even as libertarians, right? Because oftentimes we're maybe having a debate with somebody who's not a libertarian, and they're saying, oh, look, this is where the free market wasn't perfect. But then you look back and think, well, hang on, the situation we're in now is with the government, and that's also very much not perfect. It's almost like people often place this very high expectation on something. And I think we have to remember, if you leave your money in the US dollar, if you have US dollars in the bank account, that's losing. The CPI stat was recently, I think it was 7%. And that's CPI. So we know actually the real inflation number, depending on how you count it, is actually much higher than that. So it's important to really think about, what are we doing right now? Like, is the money in our bank account safe even now from a purchasing power point of view?
Great points. And feel free to continue to ask questions. I will make sure that we will address all of them to Stephan. One quick audience question, which you can answer pretty fast, but maybe you want to provide some context. Sats or bits?
Sats. Okay, so this is a little bit of a debate in the community. It seems to be going, look, every now and again, this question comes up. So Bitcoin has 8 decimal places, right? So one Bitcoin has 100 million Satoshis, also known as sats. Now, 1 bit is 100 sats. So if you go back to 2013, 14, there were people talking about this idea of using bits and MBTC and other units. But ultimately, it's the market that decides. And so it seems to me like sats is the overwhelming winner. And so people just prefer to refer to sats when they're talking about things. And I believe it will be people talking about Bitcoins if they're talking about real, big values, or they'll just be talking about sats if it's, let me buy this coffee off you for 1,000 sats or whatever it is. So I think, what's interesting it's, people who aren't used to that. Well, I would say, have you ever been to countries like Indonesia or Vietnam, where you might be buying a coffee for, 40,000 sats or 40,000, IDR or whatever. So that's just an example where that actually does happen like that. So.
Very good. Then this is a question that comes up regularly. What is Bitcoin's value? Because people say it does not have any like gold or fiat, because fiat is backed by government and gold is backed by its shiny beauty. So how would you address that? If say, oh, it has no value, it's just make believe stuff in the internet. How would you address that?
Yeah. So yeah, great question. And the way I answer this is it comes back to, again, long-term thesis. It's those points that we were talking about with Carl Menger and also Vijay Boyapati with his bullish case for Bitcoin. I think it comes down to seeing what would make the best money, what would make the most marketable good or commodity. And so I believe it's Bitcoin's monetary qualities or characteristics that actually make it valuable. Now, again, we come from an Austrian economics perspective, so there is no such thing as intrinsic value, but instead we have to think, why are people subjectively valuing this thing? And so my answer to that is we have absolute strict scarcity, we have divisibility, we have durability, we have fungibility, we have all of these concepts that apply to Bitcoin. And in many cases, Bitcoin is superior to fiat money and to gold, which are the other two main competitors in terms of money. So that's how I answer the question, that there is no intrinsic value. It's really, and if this helps people just as a mental crutch, you can think of it like, even though it's not technically precise, you can say Bitcoin is backed by, or at least value is given to it by having these qualities of these monetary characteristics. Even though that's not technically precise, really there is no intrinsic value. What we're looking for is the most marketable good.
Very interesting. Yeah, that makes me also think of, because people have a problem with the concept of intrinsic value. Value only comes from the subjective assessment of people, what they see as value. Let's say Red Bull, tomorrow everybody decides that it doesn't taste well, it's disgusting. The value of Red Bull will go to zero, even though there's sugar in there, there's water in there, there's caffeine in there, all of these things that have like some sort of value, right? Because caffeine keeps you awake, has value, right? It's in coffee. But if people would decide that, it would be gone away. The same with the dollar, right? Like these things have only like, wait, what? Yeah, the dollar, or like this thing that's already gone, the Bolivian peso, they only have values because people believe they do. And if there's hyperinflation, that belief goes away, and people will start trading alcohol and cigarettes and stuff. But it's all subjective, and it's the same with Bitcoin. Stephan and I believe that Bitcoin has value, tremendous value, and that's how we live our lives. And he is affecting thousands of people, and I may be affecting hundreds of people at this point. And then more and more people will believe that at some point, maybe it becomes a world currency. But it's not because of any kind of intrinsicness. It's just, it has, as Stephan said, it has value because they have specific properties that people like. Will people like it? We have no clue. We think they will, but it's out of our hands. Fantastic. I like that a lot, Stephan. So in your opinion, if you've talked to so many people around the world, you're traveling a lot, why do you think most people use it? Like, what are the most common use cases why people hold it, or do they trade it? Like, tell us more about that.
So I think there's one category of people who are treating it more like savings. And that could also be because they are rich enough to have savings. And then there's another category of people who are using it in the more permissionless way, or because maybe it's a little less friction to do it that way. And as I'm sure you are aware, Wolf, and probably many of the attendees today, if you've ever done an international wire, you see all the questions that they ask you and the number of times they stop you and block you and say, hey, wait a second, what's the reason for this transfer? Or you didn't get this exact IBAN or SWIFT code correctly and you put the wrong number, and oh no, now you're stuck in some queue waiting for weeks to get that money back. Many people have had experiences like this, and especially if you're doing any kind of international commerce. And so there are real world examples of people who literally find it easier to just do business with Bitcoin. They literally scan a QR, hit send and pay, and it's done. And so there's that frictionless ease, and we believe that it's going to enable all kinds of uses, whether that is using the Lightning Network to do gaming, or to have ways of paying people for the value and the content they provide, whether that is a podcast or whether that's writing. They're doing Substack recently. So those of you who aren't familiar, Substack is like a mailing list website, but basically people can do a blog that's also like a mailing list, and they can have a paid tier, like a premium tier. And so recently for some Bitcoin content creators, they enabled them to do with Lightning. So the readers or consumers of that content can actually pay with Bitcoin over the Lightning network. So that's just one example. And then there are all these people in the podcasting world doing what's called podcasting 2.0, as pioneered by Adam Curry, the podfather. Now, he along with Paul Itoy from Sphinx Chat and others were basically making this way where podcast listeners could stream sats over the Lightning Network to their podcast creators and others who are involved with the podcast. So this is like another example where they're trying to break the model or shift the model in a way. Now, who's to say whether that is the way it all goes? But it's really fascinating. It's enabling all these use cases that were just not feasible before. And so we're seeing a whole new age of internet commerce. And I believe we're going to see more and more people get into this. And as we're seeing the likes of Jack Dorsey, the CEO of Block, previously Square, he is going extremely hard on this idea because he basically is throwing his entire life's work and career into this thing because he really believes in it and he sees the value of this thing. And so that's one example. But then on the other side, you have people who just are saying, look, I don't necessarily have a Bitcoin business that I can do. I'm just going to plug my business into the Bitcoin network, right? Like a Michael Saylor as an example, where he's just saying, look, I'm just going to put my balance sheet into Bitcoin because this is effectively the better savings technology. They believe that going on a company Bitcoin standard, or maybe you and I, we might believe in going on a personal Bitcoin standard, is actually the way to store our wealth for the long term. And so however you earn money, that's one thing, but then you stack it into sats because that's how you can actually create a nest egg for yourself or to deal with uncertainty that comes in the future. Now, yes, Bitcoin is volatile, but over the long term, as I showed in those stats, we have seen 140% per year for 10 years, or going forward, I believe something in the 60 to 70% range is a medium-term reasonable estimate. So that's how I would answer that.
Very good. And we have 20 minutes left and many questions. I will jump into the questions. So if you have asked your question early and you don't get to it immediately, it's just because I'm shuffling them in a different way. So let's talk about that a little bit more because it's interesting. First, I would like to acknowledge how revolutionary that is. Now content creators, journalists, podcasters, whatever, can just put their work out in the world and can ask for sats. And like some people get like sats all the time. I'm sure, Stephan, if you have like a new podcast, like a lot of people send you, oh, this was brilliant insight. And you get maybe like 10 cents here, 10 cents there, 50 cents, $1, from people from around the world. And that's how people could sustain themselves in the future if more and more adoption comes away. So this allows for like completely new business models that further decentralize the world so that we don't only have to rely on the CNNs and Fox Newses of the world, which is fantastic. So somebody was worried about this specifically. You've touched on this, but people are worried about the stability of Bitcoin. So its volatility. What can you say about it?
So fundamentally, the volatility of Bitcoin is the price you pay for this incredible level of returns. If you were in the S&P 500 or if you were in the NASDAQ, you simply were not getting the same kind of returns that you were in Bitcoin. And so, yes, it's more volatile, but that's what is necessitated. So again, for me, I bring it back to what is your long-term thesis? If you believe Bitcoin is going to be the money of the world, on the way there, it's not going to be a steady ride. It's going to be this very hype cycle up and crash down ride. And so I think that's really what we've seen over the years in Bitcoin. And it's what I've seen over my 9 years in Bitcoin. And it's been going for 13 years. So I just think this is all part of the journey. Now, it doesn't mean everyone has to go 100% all in Bitcoin. Even if you took a small position to get started while you built up your conviction, your knowledge, your confidence in this thing, then that would be beneficial to you also. So that's how I would answer that. I would say, look, you don't have to go all in. Nobody's saying you have to go all in, although many people in the Bitcoin world are essentially all in. Well, not many, but there are a reasonable number of people who are. But that's not for everyone. You have to decide for yourself.
Very good. And right now, you might like this. The last time we talked, Stefan, we had like a dozen people that get paid in Bitcoin. Now I did like more sessions for all my staff and this, and now we had like 18 people that getting paid in Bitcoin.
Oh, fantastic. There you go.
So that's really cool. And that question that we just had came from Ike. Now we have another question by, and I'm sorry if I'm butchering your name, Angela. She asked, which is an interesting question. If Bitcoin is so relevant and such an important monetary tool for the future, how come that we don't learn about these things in school or universities in the last decade?
So I believe there is this inertia of society. It's for the same reasons that in our high schools and universities, they're not out there teaching libertarian principles. It's for a similar reason. It's that the ideas that help the current regime are the ones that have become popular. And so these are the ones that end up being taught in those schools and universities. And I think it's also a significant challenge to economics of today, of the Keynesians and monetarists and others, that Bitcoin is fundamentally a challenge to that worldview because it's a money with a fixed supply. You don't have a need for inflationary money in that context or in that world. And so that is a big, crucial difference there.
Makes a lot of sense. I like it. So somebody says Bitcoin is right now expensive. It's hard to get. Is there like an easy way to mine it? And they also say like, hey, there's a cheaper Bitcoin called Bitcoin Satoshi, and probably referring to Satoshi Vision. And maybe you can start with that point because both Stefan and I make the point, focus only on Bitcoin and don't focus so much on the other shiny stuff that people promise you the world. Because there is the Wild West out there. This is a new technological environment and people promise you all kinds of different things, right? And you have to be careful. And therefore, Stefan and I said like, hey, do your own research, but focus on Bitcoin first and foremost. But what do you say about BTC, Satoshi Vision? And how would you respond to the fact like, hey, Bitcoin is too expensive right now. Can we mine it, or how should we think about the price? Because many of the people here in the audience are students and they might not be able to like buy like hundreds of dollars every week about it for it.
Sure. So what I would suggest there is you might look at just thinking, how much can I afford to purchase? And if that's a small amount, then that's the amount that you purchase. Because I think for a lot of people, and this is something that might help you, is there's this concept known as unit bias. People sense or feel that if they can't buy a whole one, that they're not getting enough. And so that can cause people to go for cheaper coins, so to speak. But the problem with that is there's something like 10,000 altcoins out there. So if you're going to play that game, then as soon as enough people buy, say, the coin ranked 3,000 on the list and now it's in the top 200, well, then now there's coin 4,000 on that list now that people might be going for because it's cheaper. What's important is looking at what are the long-term characteristics of this thing. Is it actually decentralized? Is there actually a real-world community and network effect being built up around this? And so I think those are the quick ways to understand that there really is only one Bitcoin.
Very good. And what about the other Bitcoins that are out there? Bitcoin Satoshi Vision, Bitcoin Cash.
So best to avoid, in my view. Now, the thing that's happened with a lot of those is that their value priced in Bitcoin has gone tiny. It's gone well under 1%. So they have just become increasingly irrelevant. And so I view those coins as essentially having lost the battle and not really understanding that they've already lost the battle, because fundamentally they ended up choosing pathways that tended to centralization. And because they essentially lost the fork wars in 2017, and then the Bcash and Bcash SV, or Bitcoin Satoshi Vision, ended up losing that vision or losing that battle. And so they just became irrelevant in my view. So I would suggest that it's not the time to think of it like equities, right? So this is another common mistake. People look at equities and think, and they try to map that onto the quote unquote crypto world and think, oh, I should be buying a diversified portfolio of them, or I should be trying to buy the cheap ones. But this is very different because, again, coming back to what is your long-term thesis, my thesis is this is monetary technology. We're looking for money. And there's a reason why there's a competition and convergence towards the best, strongest money. And I believe that is Bitcoin. So that's why I'm Bitcoin only.
Very good. And yeah, a different way to think about it, like you can have in one city, you can have 100 different coffee shops and they're competing with one another, and that's fine. But does it make sense in a city of like 1 million people to have 100 different currencies? No. That's the reason why there's this convergence that Stephan just talked about. And I've alluded that in my session as well. The history, the culture, just the time that has been spent on Bitcoin, it has shown itself to be robust. There have been so many attempts, and every single day people try to attack Bitcoin and try to change it and make it their own. And Bitcoin Cash and Bitcoin SV were attempts of that. They said like, oh, we are the true Bitcoin. We're like so much better money. But competition has shown that it's not the case because they have lost out against it. That's the reason why we focus on Bitcoin, because it has shown itself to be robust. People cannot just change the monetary supply schedule. They cannot just change like some of the fundamental aspects of it. And it just tries to do one thing very well. That is becoming and being good money and having good monetary properties. And that's very different from like some of these other things that just promise one thing today and then like 1 week later, because it's so centralized, somebody else tries to do something. And they're not really centralized in that way. And that makes Bitcoin fundamentally very different. Now we have an interesting question by Fernando. He asks, is there any way that we can track institutional buyers such as banks and other entities and see if and when they're buying?
Yes and no. So obviously the large institutions, when they purchase, they need to do that through a large exchange. Now, of course, there are data security and privacy aspects that, let's say, they would try to protect that information. But there is some level of inference that can be drawn from on-chain activity. Now, I don't want to get too into the technical weeds of it, but basically every Bitcoin transaction has inputs and outputs. And then what people are trying to do with some of this on-chain, what's called on-chain analytics, is basically look at what is the flow of those coins to try to understand, oh, I see, this looks like this is the exchange A's coins, and this is exchange B's coins. Oh, look, it's going out to this custodian, and we believe this custodian is this entity. Now, some of that is a little bit of an unclear science. It's not exactly 100%. Some of it's art, some of it's science, let's say. And of course, there are people with differing views on that also. But basically, it's possible to infer some on-chain activity in what's going on. And you might be able to look at the size of different holders. You could sort of say, oh, as an example, we see that the number of coins being held by holders who are in the 0.01 BTC to 0.1 BTC range have grown over time. We could say those kinds of numbers, but we won't necessarily know exactly which entities and how much they hold. That said, if you're a government, you might be able to subpoena a Bitcoin exchange and say, hey, tell me how much this company bought. And, they would be able to tell you. But there also are hundreds, if not thousands, of Bitcoin exchanges around the world today. So that is also becoming less and less, I guess, practical if there's all these different exchanges all around the world. So complicated answer, but yes and no.
So yeah, this is what Stephan has talked about. I think this data is somewhat accurate. Stephan, would you agree with that? You've seen this table, I'm sure. Not that I'm
yeah, I saw that. That's a couple of years old now, but I don't know if there's an updated version of it. So yeah.
Yeah, I'm sure there's an updated version of it, but that gives you like an idea that Bitcoin is not like that centralized. If you look at it, the addresses that hold like between 100,000 to a million Bitcoin, I mean, that's Satoshi's address, of course, and he has never moved his Bitcoin whatsoever. That's part of it. But you can see it's fairly distributed, and the people who are holding like this amount of Bitcoin, 0.001, this has been growing quite a lot. It's like nearly 50% of all addresses. So you can see it's not like that centralized at all. And like more and more people doing this, because if you think about this, if this becomes like monetary property in the future, or like money in the future, there's 21 million Bitcoin, there's over 8 billion people. Do the math, people.
Correct.
You cannot hold like, there's only like 20 million people that could hold like 21 people that can hold a million Bitcoin. Now there's like many few people who can 100,000, like 1,000 Bitcoin, and then one, and so forth. And so people always say like, hey, Bitcoin is way too expensive right now. But people said that with $100. They said that with $1. They said that with $10,000. But it's a very different good that we're looking at, for sure. So those were excellent answers. Thank you so much for that, Stephan. Then we have another interesting question. People say like, hey, because of the volatility, it cannot really be used in daily transactions. I think, Stephan, you're using it in transactions much more commonly than the average person, but tell us about your experience and what would you say about that point?
Right. And so it depends how you're using it, right? So for some people, they're just using it as savings. So they literally just stack savings into Bitcoin and just have a small amount of fiat that they're using for fiat day-to-day earning and spending. That's one way to do it. Another way some people use it is that they are using, well, in different countries around the world, they may be using other alternative services that allow you to instantly convert. So as an example, you can sort of instantly convert some fiat into Bitcoin to pay this Bitcoin invoice, as an example. So Strike is an example of that. But on top of that, I think it just fundamentally comes down to thinking about it as your savings and your balance sheet. So that's what I think that's probably the main aspect of it. But I mean, the other point that's probably, to be fair, there are stable coins. So stable coins, for people who don't know, are like this token that's there to represent, say, the US dollar. So Tether is an example there. So those are some examples where people are using some of those to sort of flip between those and then between Bitcoin. But I believe the broader story here is about actually adopting this thing as your savings technology. And then over time, then it'll make more sense for people to actually use it in day-to-day commerce.
A quite narrow question, but maybe you can address it with a few sentences. How about all of these cards that promise cashbacks in BTC? Would you suggest those?
Okay. So one thing I've heard is it depends, right? So for example, I know there's like examples like Fold and others out there. You might look at using that as a way to just try to get it started. So for some people who are thinking, oh, I don't want to buy some, you might just start with the likes of these cards or sats back opportunities to start stacking. Otherwise, there are other people who are looking at it more like, oh, well, I might get more of a % cashback if I'm using some other way, and I'm just going to stack those sats as the difference because I'm actually getting more cashback. So, I mean, there's different ways to think about those, but for some people, that might be an easy way to just get started because they're just using their already existing spending to just start stacking a few sats just to get started on the journey.
Yeah, and it shows you like how developed the market already is. What Fernando was asking this and Stephan just talked about is basically like you can use a normal credit card with your normal fiat money. And again, like this is only available in a few countries. It's not available everywhere, unfortunately. That shows you like how young this market is. But you can pay something with your fiat money, but you get bonus points back in sats. And that's like an easy way to stack, and that exists already. But somebody with the name B, last name S, asks about, maybe you can tell us a little bit about the whales and their influence on BTC's price, and other aspects of the price, maybe like what people should be looking out for.
So the thing with whales is they generally are entity. So some of them are just like the examples are like these big companies who just have purchased a lot of coin, and some of them are individuals who were early in the game. Now, over time, I think historically it was true to say that there were some whales who tried to move the markets, let's say, so they would try to do a lot of sells to try to hit a lot of stops, and some of this occasionally does occur in the trading casinos, the Bitcoin trading casinos. But I believe over time that behavior is going away because as a whale, if you try that move, and you fail, then you end up losing your stack or losing some of your stack. And so you lose your influence on that Bitcoin price. So the way I see this is it's going to distribute out and out further over time, just as Wolf was making that point about the distribution of coins aspect of it. So I think some of these whales are actually just entity accounts. So we should just think about it like that. It's not necessarily an individual holding all those coins. And in general, we should anticipate there to be less of them over time because it is just going to distribute out such that anyone who wants to get in, well, they have to purchase some. And then in order for them to purchase some, they're often having to offer a high enough price to entice the current holders to sell some. So, yeah.
Yeah, and some people have never sold any Bitcoin, like myself, and I'm not planning to. So that's all very good. And this actually segues nicely in the last question, because I know you want to be out of here on time, and we will be on time. So for the last 4 minutes, Severin asks, BTC is a great alternative to our current financial system, but there's only 21 million, so it's very scarce. So and you've touched on this a little bit, but he's asking like, how do we keep it fair, accessible for everyone, so that the rich doesn't become like more richer and like the small little guy has no chance of buying into it? How would you answer that?
So I think this is one of those things where it depends on your view. I think Bitcoin is not necessarily going to be equal. Like, it will be that the people who were early and had the right vision to hold and took on that risk, yeah, they are going to end up with a lot more coins. But the good side of it, though, is I believe it is going to lead to a world that's more prosperous, and that it's going to be the rising tide raises all boats. And so because of us living in a world with hard money, in a growth deflation world, the good kind of deflation, that we're going to be living in a world where the costs of services and food is coming down over time, and it's going to be easier and easier for people who want to start their own business or do their own way to build wealth in their own way. And so I think it's also, we are just fundamentally not equal, and that, that there are some people who are really talented at this, that, or the other, and that is a skill that's highly valued on the market. And so in exchange for that skill, or let's say they are a very highly talented entrepreneur that they can make a lot of money doing business, then the sats will flow in that direction. So some of this is, I guess, it's not a problem with Bitcoin per se. It's just that is the state, that's the nature of the world, that we're unequal. But the other part of it is that I believe it will be a more just system, in that people who are currently shut out might actually have a chance to compete now, because they'll have an opportunity to do a business that they might not be able to do currently.
Very well put. It's open to everyone. Anyone with a cell phone can participate. And even if you don't have a cell phone, there's ways you can acquire it as long as you have access to cash. You don't even need a bank account. And that's much fairer than the financial system that we have in many countries around the world, where 2 billion people are underbanked or don't even have any banking system. So, and if you would have invested like $10 like 5-6 years ago, that $10 would have been much, much more right now, like thousands, if not tens of thousands. So, and
I want to add one more point, actually.
Oh, go ahead.
Just on that, as you were just saying, that point around accessibility, because if you are a high net worth person, it's very easy for you to be able to access things like property or stocks or other aspects of that, because you can come up with the deposit or you can access the credit. But if you're a person who can't access that level of deposit or stocks or things like this, how do you save? It's just hard for you. So with Bitcoin, you can purchase $5 of Bitcoin. You can purchase $20 of Bitcoin. You can purchase whatever size that you can afford in your budget range. So in that sense, it's actually more accessible.
It is an option that was previously not there. And it's an option, finally an option again versus fiat money, right? You don't have to buy art or like a house or something. You can buy this. So that's fantastic, Stephan. Your insights were brilliant. If this conversation is interesting to you, if you like philosophical ideas-based conversations, please check out studentsforliberty.org. Become part of our local coordinator program so you can meet other people who are also interested in these things and get high-level training. But also please check out Stephan Livera. He has a fantastic podcast. Just Google his name, you'll find him, but also follow him on Twitter. And also check out swanbitcoin.com. Stephan, thanks again so much for your help. We make sure that we have recorded this. We will put it out there. Everybody will get the recording after the 4th of February, because we had like hundreds of people register for this. So all of them will be able to watch it offline, and we were going to recycle the content in many other different ways to push out the great insights that you have shared with our audience. So Stephan, thanks again so much. Thank you everyone for joining and for your building questions. It was a lot of fun. Thank you. Bye-bye.